Hello everyone, welcome to today's webinar. Appreciate you joining the time. All this is brought to you by Intuit QuickBooks. In addition, my voice on the phone, my name is Ian Vason. I'll go through a little bit about myself, but I'm also from Carbon. So if you need to check out us, just go to carbonhq.com. Today, what are we talking about? So for the next hour, we're going to be talking about a simple sales process for accounting firms. As part of the Firm of the Future content series, you can learn about this and many other topics by going to firmofthefuture.com. For those of you that have been a part of the training journey, you may have been seeing us doing a bunch of roadshows recently. All those training events can be found at qbtrainingevents.com. It could be coming to one of the more broader events for Firm of the Future. But maybe you want to learn a little bit more about QuickBooks Online. That's what fundamentals training's for. If you want to get certified, distinguished, and so forth, go to certification prep. And if you're already certified, the next step and last step of the journey is advanced certification. So again, all those things can be at qbtrainingevents.com. Few things to note before we get started. One is we're using GoToWebinar. If you're not familiar with it, please use the orange button at the top to expand or collapse the panel. Closing the apps that might slow your connection down. And I'm joined here by my colleague, some of you might know her, Andy Anchetta. She is on as well, and she can answer some questions as we go through, and I'll try to answer them as we go. Not so great at multitasking, but we'll see how it goes. Who am I? My name is Ian Vason. I'm a co-founder and the Vice President of Product Marketing at Carbon. My email is down there below, so is our URL. I've been in the industry for 15 plus years, technology industry over 25, and I used to work at Intuit for almost a decade, leading the Pro Advisor program as well as other different departments across the QuickBooks franchise. On the Carbon side, again, there's two things. One is if you want to learn about more, go to firmofthefuture.com. For Carbon, if you want to learn how to double your firm, a little extension of the topic that we're talking about, you can check out carbonhq.com/editions to learn about topics like this and some others. If you want to learn about Carbon, we're not going to do that today. It's the practice growth engine for accountants. And you can go to carbonhq.com or events.carbonhq.com to be able to learn how Carbon brings together all of your work so you can see what needs to be done, what does next, bringing in your email, your contacts, your work, your checklist, your task, all into one place so you know what to do and know what everyone else is doing all in one place. So again, if you want to learn about that, go to carbonhq.com. However, we are talking about a simple sales process for accounting firms. One more piece before we get into the topic is if those of you looking for CPE, there is one CPE credit up for grabs today. I will be giving a slide that has a keyword on it. You need to note what that keyword is, and I will poll at the end of the webinar today for what that keyword is, and therefore you can get credit and get your one CPE credit. All right, so let's talk sales. How many of you, and again, I can't see the virtual hands, woke up one day and decided you want to be sales and marketers? Most of you probably not so much. You wanted to work as an accountant or as a bookkeeper, as an EA, as a CPA, whatever it might be, but it probably wasn't sales and it probably wasn't marketing. So the good news is that 64% on average of new clients in accounting firms today is due to referrals. That leads two different sides of the equation. One is it is a referral-based business. The majority of what you're going to get is referrals. And again, I've done talks before. You can go to firmofthefuture.com to see it in terms of how to do the best referral marketing out there overall. But another reason for why that number is as high as that it is that there really is a very low bar for sales and accounting, which is a great thing because you're at this webinar today. We can help give you some easy, quick tips and tricks about how to do it and how to do it at scale. So one of the first pieces and we're going to talk about as one of the first key steps, is around targeting. Sales and marketing are driven primarily about how narrow of a focus that you have, because that's going to increase your ROI and it's going to increase your probability to close. And so most people out there don't really have a targeted approach, and that usually leads to low outcomes inside of sales and marketing. The second one is when people talk about marketing specifically and leading leads into a sales funnel, they generally just focus on inbound marketing. And the reality is it's just really around website redesign. which is a start, but it's not sufficient and it's not necessary, again, if you're going to want to be doing this properly. And the last one is rarely do I ever see anyone doing outbound marketing. And we'll define what outbound marketing is a little bit later. But a quick example is you picking up the phone and calling someone to sell your services. That's, again, telesales, not necessarily what you need to be doing. But, again, that is an example of outbound marketing. So we rarely, and again, I've met with thousands upon practices over just the last year alone, rarely do we see this happening. Now, when someone does go down and decide that they want to actually go down the sales route, the typical path that we generally see is they go hire someone that's called a business development manager. And generally that's from a marketing standpoint. And they're probably, a lot of times they're not a sales and marketing expert or well experienced. They may be experienced on one side, but not both. And generally what they're doing is they're going and looking at the website, redesigning it, and then they're going to focus on the referral marketing side. And so that's the typical path. And in my opinion, while it's the bare minimum, it's not sufficient. So with that being said, for today's 1 hour topic, I've broken it down into 7 steps that we're going to talk about. The first and most important is you got to know who you're going after, because it's going to change how you market, but it's also going to change your sales conversations inside and out. The second step, it's about measurements. You do this with your small business clients. You talk about how you're going to be looking at how the business is performing. And on a sales function, it's really, really, really key to understand what you're trying to achieve, how you're achieving it, and how you're improving on that day in and day out. And especially if you're going to be hiring somebody, for instance, to working on the sales or marketing pipeline, you need to know how that pipeline is performing and what activities are working and which ones aren't. Because marketing can get expensive, and salespeople will generally find the best way to increase their own incentives, and it better be in line with what the business's incentives are overall. Step 3, we're going to talk about structure. Again, how do you structure organizationally your marketing and sales functions? 4th, we're going to talk about infrastructure. And so what are the tools that are people using and what are the processes that you need to put in place? Again, we talk about sales process here in the title. We're going to get to that in step 4. Step 5, we're going to talk about the inbound side, marketing side of it, because that's what's going to feed your funnel. That's got the lowest cost to it and should have the highest probability to close. Then we're going to talk about outbound, which we mentioned before is not where most people are focused. And then lastly, it's about scale. So how can you scale up? So it's accretive overall. So with that being said, let's get into our first one. Step 1, how to target. Now, again, if you go to firmofthefuture.com, I've written articles up there already about how to target. So I'm only going to go through this a bit briefly, and you can go ahead and reference those materials there if you want to have more interest. The quickest, easiest way to understand who best to target overall and what segment is ideal for you and for your firm is think about what you're passionate in. Sit back, think about the 10 or so clients that pop front and center in your mind, and think about which ones, when they call, you get most excited about. Now look at those that you might have several that pop to mind. You then want to understand what about those firms makes you passionate. Is it the type of work that you're doing? So is it the services that you offer? Is it the markets that they sit in? Is it an industry? Is it the characteristics of the owner? So different ways to look at it. But the first step to really get an idea of where to focus is really just what you're passionate about. The second one is to actually look at your clients. You should all be using and scoring your clients based on Net Promoter Score, see how satisfied they are with your services. Again, you can learn about Net Promoter online or go to Firm of the Future. But looking at which ones are satisfied and which ones are your promoters, you can dig into those ones and figure out, well, why are they so satisfied? What is the commonality that exists across them that ultimately leads you to narrow down or focus on a particular segment? Vectors of similarity. Vectors of similarity are industries, technology savviness, willingness to pay, perhaps, the functions or size of the business, complexity, the revenue size of the business. There's different factors that you might want to look at that help you break down which customers you do best with, which ones you're most passionate about, and which ones have the best ROI. And what you then do is you take those 3 inputs at the start, you look at them in aggregate together, and then you start to narrow it down until you get to a point where you actually have a niche. There's both a qualitative and a quantitative way to do about it. Again, go to firmofthefuture.com and you can see about it in detail. But what we're trying to do here is to find a narrow target by which we can direct our marketing and our sales efforts in order to provide the best fluidity through a marketing and sales funnel. And so that's the starting point of everything, okay? That's going to lead to step 2. So step 2 is about setting up the right measurements before you're going to go and start doing a lot of effort on both on the marketing and sales funnels, and then what you're going to monitor while it's all moving forward and while you're doing different initiatives. I put up here a quote. Every good presentation should have maybe one quote, probably not two. But Peter Drucker is the godfather of business processes, business management. And I think it's it's a good point. If you can't measure it, you can't improve it. And that's the whole point here. Your sales processes need to be improving day in and day out. If you're starting out and you're doing 90 days to close a deal, you want to be maybe having a goal of 60 days. And when you get to 60 days, you want to have a goal of 30 days. But it's trying to wring out all of the extra time, and as well as being able to improve the probability of each particular opportunity that comes through your sales pipeline. So how can we do that? So I brought up here a bunch of different measurements overall. You should be thinking about your particular practice like a tech company today thinks about their SaaS business. And so these are what I would call accounting as a service metrics. And again, none of these are really foreign to you overall. Looking at revenue, looking at margin, gross profit, looking at churn, but then looking at some of the more interesting ones. How expensive is it to acquire a customer? What's the lifetime value? Again, we're moving to monthly services. You should be, again, advisory services and bookkeeping and accounting services, and those should be on subscription basis. And so you need to be looking at things more granularly, so month-over-month growth, revenue per employee, and so forth. So again, the high-level metrics that are going to give you a sense of the business overall and your practice overall, just like what you advise your small business clients. But then some of the ratios become a little bit more interesting as we look at accounting as a service. Again, looking at lifetime value over the cost of, in relationship to cost to acquire. A quick ratio, we all know that. The SaaS magic number, again, it should be accounting as a service magic number. And again, if you're not familiar with that, just search on Google and you'll see what it is, and it'll give you the threshold to what's good and what's not so good. Always knowing what your best and worst accounts are. What are your, looking at some of the productivity metrics around staff activity, and then around efficiency, task, and work insights. And those are a little bit more individualistic on the practice. Now, on the sales side overall, and on the sales measures, these are the ones that are most important. What are the closure rates? When you have an opportunity, what are the counts of your opening, your closing? It's all about quality and qualification. So, what's the percentage in terms of fit? What are the size of the opportunities in terms of dollars? Maybe you might want to look in terms of employees. When is each one expecting to close? Because you want to have visibility of your pipeline. That's critical. You need to know when exactly each deal is going to close, because you need to make sure you can service it with the staff you have on the back end of it. And then your average time to close. How long does it take to open up an opportunity and ultimately close it at the end of the day? We're going to look at numbers later, but on average, inside most accounting firms, that average time to close should be 30 days or less. But again, I'll give you some best practices and some numbers a little bit later in the presentation. Okay, so now we've got a focus in terms of where we're going to focus our efforts towards in terms of a niche. Now we've got some metrics to look at overall to see kind of how we're doing. Now it's going to lead to what is the proper structure for success. And I've talked about this before in terms of how most organizations are designed, most practices are, and they're usually vertical or they're horizontal or possibly hybrid in between. And so I put up the graphic here to kind of show what that is. And that's because they're mostly designed in terms of how do we get the work done. And so a vertically oriented firm is headed up by a partner who then has a group of specialists, or let's not say specialists, they're a group of individuals that are more senior typically that can be able to service a client holistically. So they may have had, a focus in accounting, but they can do bookkeeping, they can do advisory, they can do whatnot. And generally that person is sent to a particular client or managing a particular client, and they're wholly servicing that client overall. And there's scale about how big those firms can get, but basically you've got a pool of resources that you can attribute to any given client as you need. Versus a horizontal firm, which is generally what happens to firms as they grow larger and larger, you then get a specialization that occurs. And so you then get accounting departments and payroll and tax departments. And the work is then managed by an account manager. It may be managed by a manager. There might be a manager that sits over each one of those departments. And the work moves from department to department in order to service the client as their needs are. So again, if I'm doing advisory, tax, accounting, and bookkeeping, there may be 4 underlying departments that do the work, and it's managed by one account manager. Now here's the problem. That's great for getting work done, but that is not conducive for how sales and marketing function. It is not necessarily one of the people that's listed in that organization structure's job in order to do sales and marketing. And you need to run your practice like a small business. Now, you may have that vertically or horizontal or a hybrid of the two in order to service clients, in order to get the work actually done. But you need to have the competency and the capabilities to do your own finances, to do your own operations work, to do your own sales, to do your own marketing. And so you need, and maybe even social marketing, I don't know. Maybe you have an intern that does that. But again, just like you would advise someone else, you want to be able to have a proper sales or marketer or a combination of the two focusing on that side of the business. When it first starts out, that might be you. That might be the partner, the owner. It might be the firm operations or administrator. And then it may become somebody that's dedicated. So it really depends upon where you are in the cycle of things. And generally, it is a function of the owner to be focusing on the sales. And as that's well understood and the metrics are driven and understood, then you can bring in somebody that you're going to have this be their day job as you move forward. And as you as an owner, you may be stepping back then and just doing the work on the close of any deal, on any of the given deals. And so again, run your business like a small business. Have the particular functions you need in order for it to be successful across both getting the work done, but also bringing in the work that you need. And so let's talk a little bit about the sales and marketing resources that you need. The first one we mentioned before is most people go out and they hire what's called a business development manager. And it's generally in terms of focusing on the marketing side of the equation. This might be a good starting point. However, a salesperson and a marketing person are generally very different. They have different ways of thinking about things, and most marketers don't make good sales, and most sales don't make good marketers. And so that may be a starting point, but that business development manager might need to be moved into being a dedicated marketer or working on biz dev in general, but not necessarily in service of sales. When hiring in sales, what we find, and for practices overall, if you have the ability, is to hire 2 sales people at a time. The reason for that is sales is very competitive. And when you have a single person working on it, it's harder for them to be motivated, and it's harder for them to have that sort of competitive nature come out. Now, what some people do is they'll take the salespeople and they'll bring them in 2s, and they'll have one with expertise in the niche or the target market that they're going to. It might have been a client that they had in that area before. It might have been someone who's worked as a small business owner or has had some experience in working that vertical niche, for instance. And the other person is a trained salesperson. Might be younger, but it might be a salesperson. And what that allows you to do is to cross-pollinate the two in order for the salesperson to learn more about understanding the small businesses that you serve and how they operate and what's unique about them, while the vertical expert, industry expert, or the prior business owner or client that you've had can learn the necessary sales capabilities and processes and the like. And therefore, you're able to get this nice cross-pollination. When you have, generally the ratio that we see in firms is a 2-to-1, meaning that whenever you've got 2 sales folks, in this case, what we call SDRs, sales development resources, or development reps, you're going to need to have 1 account manager. Now, if you're just starting out, that account manager is usually the owner, or it may be the operations person. As it gets broader and broader, we've worked with one firm who has 16 salespeople. And so when you start to scale that up and it gets bigger and bigger, those salespeople are going to ultimately report to account manager, Again, that's the person who's able to close deals, and that account manager reports up to the the COO or the firm's operations manager, and then that person reports up to the partner or the owner. So that's kind of how the structure breaks down. When hiring, again, sales folks are definitely, for some folks, a little bit more of a challenge. There's two different mantras and again, this applies just to hiring in general, but you hire for aptitude and you hire for attitude. Attitude being, in my opinion, the most important. Aptitude in terms of whether or not they're able to do the type of job that you have. The second mantra is you hire for passion, you train for skills, and you fire for example. And what I mean by that is, again, just like before on attitude, you cannot train attitude. You cannot train passion. You either have it or you don't. And if they don't have it, they're not the right fit for you. You can, however, train for skills. So if you have the ability, if you have some capability here and you know how to do it, you could take somebody and train them into the sales skill set that you need. And then, again, especially for sales, if it is not working out, you need to get rid of them as fast as possible. And so you're firing, for example, for those other folks that are out there, so they know, again, what performance should be, and you're measuring along the way. But it might, if it's only one person, again, you need to get out the dead wood and bring in somebody that's going to do the job correctly. And so the longer that you have that in there, it's going to fester overall in the organization. I highly recommend, again, most people that are listening to this webinar today are not salespeople. So hire someone that has experience, and the experience can be of two sides: the target market that you're operating in, or again, the sales expertise that you need. If you're early on in the journey, contract. It's going to be cheaper for you. It's easier to get a contract resource in and out than it is, again, if you're not sure what you're going to get. And so even if you want to go down a contract to hire scenario, again, I would urge you to do that early on to understand, what the pipeline is going to look like, what the right resource is going to be. And again, it allows you to test the water without all the other baggage that comes with it. And then in the firm overall, everybody needs to have a sales mindset and always be closing mindset. The salesperson definitely has to have it. You as the partner or the owner or within, you might be managing clients overall, you have to have it. Again, every conversation has a possibility to be a close of a sale, an upsell, or a cross-sell opportunity. And so even if you're the one servicing the client, you need to be looking at, well, where can we do more business with this particular client? What do they need? How can we address it? And making sure that conversation is teed up so that you can move forward with doing more. It's cheaper and easier to do more with the clients that you have than to go find new clients to fill in the gaps. So now we've talked about the people part of it. Now let's talk about behaviors and compensation and the like. Okay? First is that you must realize, especially with salespeople, they're always going to maximize their value in the equation. They're driven by money. They're driven by success. They want to close the deal. They're going to figure out how to game the system however it's been put up. And that's their job. Their job is they're motivated by the compensation package. They're motivated by what the firm is trying to do. And it's not a bad thing. But you need to be very careful and smart about how you align incentives and how those ladder up to the goals of the organization overall. And so just note that exists. The second thing is they need to be compensated, and that compensation needs to be able to satisfy the basic needs that they have. So this is just like the Maslow hierarchy, needs hierarchy. You got to be able to live. And so running off of a fully variable incentive-driven compensation isn't going to work for most people. So there's going to be a fixed component and there is going to be a variable component. Now, what do we see? Best practices out there right now from what we see in those who have had the most success, we see what's a 70-30 model. 70% fixed, 30% on a variable model. And so I'll go through what that variable is here in a second, but again, that's roughly how the breakdown is translating. And the salaries are ranging anywhere from $40,000 to $100,000 a year. It really depends on where you're located, what target market you're going after, the dynamics of the local market. And so that's why it's a pretty varied base. It's also, again, the seniority of the resource that you're getting. And so again, I know that's broad, but again, it really depends on who you're going after and where you're situated. Now, on that 30% variable side of the equation, again, 70% is fixed, 30% is variable. What we typically see in best practice is that 50% of that compensation is paid on opportunities being opened, and those are qualified opportunities. And so, having a target, what that might be, maybe it's 1 a week, maybe it's 10 a week. It really goes into what the fluidity of your sales pipeline is when that person is coming on staff. And generally, that's why we say it's good for you to play in sales beforehand to understand what sort of capabilities you have to bear, and then revisiting those targets over time because they're going to generally keep improving if you're doing the right things. But 50% is on the open target, and then 50% is on those opportunities closing. Now, I mentioned before that on average, we're seeing about a 30-day turnaround from open to close. And so there is a separation from, when someone comes on, they're not going to necessarily get that 15% of that, half of that 30% variable model being paid out in month 1. Again, it's going to go out based on how fast your pipeline's progressing through. And the last thing is, as we go through, click too fast. The last thing of the equation is, let's not forget the upsell part. And so this goes back to the conversation before of everyone should be selling. Now, we've seen, again, the salesperson may not be involved with the client after they've come across. They may be involved. They may be brought back involved if a cross-sell or upsell opportunity is identified. And you want to make sure that you're incentivizing all your staff to be able to cross-sell and upsell based on working with the client day in and day out. Now, we've seen, again, this is where people have gotten creative, and it's really a right for me sort of strategy. Some people will give a residual on the service work that's done. Residuals are very dangerous, so note that. Others have given a one-time spot bonus in terms of if a client, and it's of a percentage of the services. There's other ones in terms of maybe in terms of there's some of their compensation has become variable on how much they can cross and upsell. So it really depends on what you're trying to accomplish out of it and how involved your people are within that sales process. Again, some people will split whatever the incentive is between the salesperson and the person who's doing the work, so that way that they partner together when an opportunity is identified. And so again, it's about how you're going to manage the sales process overall. So, as I mentioned before, this is a CPE credit-worthy webinar today, and our CPE keyword is woodpecker. Again, for those of you looking for CPE, our CPE keyword today is woodpecker. Nice little picture there. Appreciate Wendy who gave this to me. And again, I'll do a poll at the end for that CPE keyword that is woodpecker. All right, moving on. So again, the title of the talk was about the process. So now we've talked about our target, we've talked about our metrics, we've talked about our structure, we've talked about hiring and compensation. Now what's the process that we're going to follow, and how do we support these people with the infrastructure that we're going to need in order to properly do sales? So let's go first with process. Now, at the end of the day, if you don't have anybody to reach out to, talk to, or contact, that doesn't really help a salesperson overall. And so part of that is marketing driven, part of that is sales driven. And so you're going to be spurring your activity. You're going to be bringing your volume that you're going to try to process through on your referral marketing activities, your inbound marketing activities, which, for most of you, it might be the website, but it might be search engine optimization. There might be other activities I'll explain later, as well as your outbound activities. That could be advertising. That could be your events plan. That could also be outbound calling as well. And so, those are the things that are ultimately creating the leads that you need in order to generate opportunities and then close into sales. Each one of these leads that comes in must be qualified. You need to make sure that if somebody's calling in and it's not a market that, let's say, you don't address nonprofits. It's just not something you do. You're not set up for success on that. You need to be able to identify that, this person is a fit for what you do or is not. And if they're not, you need to move on. because you need to have your salespeople focused on the opportunities they can close in order to maximize the benefits and the ROI. Now, their job is when they're able to get a lead, is they want to ultimately get them on the phone or a video conference. Going back and forth on email is slow. It takes time, doesn't drive a relationship, and ultimately doesn't lead to the best sales outcomes. So they want to be getting to a conversation where they can properly qualify, and that qualification is on the opportunity size. What type of services are we talking about? Over what duration of time? What's the willingness to pay? How much budget does the client have? You got to ask for what their budget expectations are, because again, if they're not willing to pay, then it's not worth your time. Time and time again, people will not ask for that, and again, you can cut a conversation short and quick by knowing that they're looking for the cheapest firm on the block, and that should not be you. Next is really around fit. Do they fit in terms of how you guys operate, the processes you have, the technology stack that maybe you're using? And then they need to be prioritized. If it's a hot lead, big opportunity, fits perfect lead, it goes top of queue. If there's some question marks about it, you need to focus on the ones that are going to drive to a finish the quickest and move the other ones further down when you have more time to spend. The next is in that process after qualification is driving that conversation. And this should be almost in the same conversations, but it may be a follow-up conversation, which is finalizing the scope of work that's desired, having the value conversation overall, explaining what you do and how you do it, explaining the services that you provide, and narrowing it down to, again, if you're doing packages and you're serving them up, which package is right for them, and any sort of modifications around that. Because in sales, you're trying to make sure that you drive to a signature as fast as humanly possible. And that's what step 4 is. The process is to drive to a close. In a larger sales organization, this may not be possible to drive to a close. It may require an account manager or the partner to be able to have that conversation to sign off and move forward. In smaller organizations, those people need to be empowered. And it may be you as the partner or the owner or the person who's handling the operations that you're making the phone calls. In that case, you don't want a time lag. You want to drive to a signature. And we're going to talk about even technology for that. Again, you want to get the proposal done. Maybe you're going to use a product like Practice Ignition to do the proposal work back and forth, leading to a signature. Maybe you're using Practice Ignition. Maybe you're going to use something like DocuSign. But again, you want to limit the lag time that exists between any one of these steps to get to immediate signature. The next thing is if you do get a signature, it's minimizing the onboarding time, because that's also a risky avenue. And you want to make sure that you schedule your follow-up meeting immediately upon the close of the deal. Again, every task you complete, your next task needs to be immediately scheduled and put in place. Get a signature. Don't, if it's a handshake, you immediately want to follow up, get that signature. Once it's on paper, it's a commitment. If it's just a handshake, a lot of things can go sideways. And so use technology as your help here. But again, trying to get the lead, move it quickly to a qualified opportunity, get the scope of work, drive to the close, get a signature overall. And so your close rate overall is completely a relationship around how many steps it takes to get it done, how much time happens between each step, whether or not the client work was understood, and any generated friction that exists between you and the client to get things to move forward. And so you want to be eliminating the friction. You want to be eliminating the steps to finalize what work needs to be done, and you want to be eliminating all the time that happens between conversations or even within a given conversation to getting an alignment of what we need to have done and what time frame and how we're mutually going to benefit from this. Now, on the other side of this is you have to have visibility of that sales pipeline in regards to what you do and how you do it, because you got to have the capacity to fulfill on the sales that are brought in. You don't have an infinite amount of capacity. And I urge all of you to go underneath Ron Baker's advice of running your firms at 85% capacity. Because if you've got a hot deal that comes in and it's going to bring in a lot of money, you can't necessarily cut the service of your existing clients, but you want to be able to bring that in. And that extra 15% of capacity that you have can be used in order to fine-tune your business overall, do process improvement, do cross-sell, upsell opportunity work in terms of trying to find that. So again, you can use that capacity for really good benefits for your firm. But again, for capacity planning, you've got to have visibility to the number of deals in the pipeline, when they're going to close, what the quality is, so that you can make sure that you are making sure the best deals go through, they close when they need to close, and you can service them immediately, or at least how you've described with the client overall. So that's the process. So let's go through a little bit more in depth around some numbers, some tips, and some tricks overall in regards to that process. So first thing overall is, what are the numbers to note? So those that are doing sales and have a proper sales function, they're generally getting something between a 50 to 75% closure rate. And partially that's because a lot of the leads that are coming in are from the referral side, and referrals have a high likelihood to close because they've already been vetted. They've got someone who's already been endorsing them because it's coming from somebody that they know, and therefore it's about having a great value conversation and then limiting that time lags that exists between steps. Now, in terms of creating opportunities overall and opening opportunities, the open rate of opportunities based on both an inbound and an outbound marketing funnel leading to sales is generally around 25 to 50%. And again, you can inflate that number by having poorly qualified leads. But again, when you have a properly qualified lead scenario, you should be, knocking out at least half of those people coming in because they're just not going to be a fit for your business. So a healthy area to be in is at 25 to 50% in terms of open rates. On average, most people are going from an open to a close within 30 days. Best in class is 1 week. 1 week means that you've got an opportunity that comes in, you pounce on it immediately, and you're having touch points possibly once a day. And again, it's taking, and I'll show you in a second, it takes about 7 touches in order to close a deal. And so that means you're doing 1 touch per day or even more than 1 touch per day in order to get them interested and moving them along the path. On average, most people aren't touching an op every day because of just what happens. And again, it may not be appropriate to contact someone every single day. And so on average, you need to be doing it at least every 3 days. And so you may have had a conversation. You're going to schedule the next task. That next task might be a follow-up email. That email's got to happen within 3 days of when that first touch was done, because it's going to take you approximately 7 touches. So if you're doing 7 times 3, it's almost 21 business days to get that done. And so again, that's going to cross over that 30-day time frame. Key things when qualifying leads, again, it really goes back to, do they fit your niche? Do they fit your target market that you're going after? Do the systems that they use, systems that you prefer and can use? Again, if you're using 5 different general ledger apps, that's really, really problematic on your infrastructure. You should have standardized processes. You should have standardized systems. And so you want to make sure that they're going to be amenable to how you operate, because if not, it's going to take you a lot more time and there's not as much value in the equation. The last one there I point out is, do they have the budget? We talk to really, really good organizations, and they all say, we will ask the client what their budget or what they expect to pay for the services that they need. And the reason for that is they need to be able to understand, are we talking apples to apples, or are we talking apples to oranges? Because if they don't have the budget, it doesn't matter where the conversation is going to go. It shouldn't be a client that you take on. And so it's very foreign to a lot of people to ask this, but it's the right thing to do, because if they're not a fit, direct them to somebody that might be. There might be someone who's a low-cost leader, and that you get what you pay for. But again, you can direct them to them, and a lot of times you'll be able to say, look, I'm not the right guy for you, or the right firm for you, because you want to, we just don't operate that level. But, go and find someone that's going to fit there. And if you find it doesn't fit your needs and you want to get more of the best in class, or someone's going to know how your business runs and get you to the goals that you have, come back. Let's talk in 3 months. Tips and tricks. Referrals. Let's talk about referrals. Best salespeople in the accounting industry that do this will have the meeting with their client. Usually it's a moment of delight. Again, I've talked about how to do referral marketing. They will specifically ask for a referral. And when someone says, oh, I'm not so sure, they'll say, well, just give me a name. Give me one name of somebody. And they will press that particular small business client until they get an actual name. And then once they get the name, they immediately follow up with that particular name. If they don't have the contact details, they follow up with the person who's giving the referral to ask for the additional information immediately upon the close of that meeting. Yes, does it feel forced? But this is how salespeople operate. And this is, again, it's not, if you're doing great work and they're a promoter of what you do, it's not problematic because you're going to be helping another one of their friends or family or peers to be successful just like you've made them successful. So you've got to be aggressive. Second one is you've got to push those opportunities as fast as possible through the sales funnel. We've talked about that before. Your emails, again, you are going to be doing email conversations, but those emails need to drive to a call or to an in-person meeting or to a virtual meeting. Use calendaring apps, for instance, to get them to pick a time on your calendar and then plug in an automatic virtual meeting. Maybe it's Zoom. There's other products out there as well, but drive it to a face-to-face because sales works in face-to-face, more relationship-driven environments. Persistence pays. It'll take you about 7 touches to close a deal. Really important one here is salespeople do this. No matter what's happening, when you finish one task, you spawn the next. Let's just take the example of a once-a-year tax client, which generally, you get done with them. Let's say it's in March, and you're not going to see them again until hopefully you're going to see them again, but maybe it's in December. But your next task needs to be scheduled immediately. So use a proper task management system. But at the close of the meeting, schedule maybe your next task might be the thank you card that you're going to send weeks later. It might be the follow-up email in September alerting them of tax changes to understand, or it might be the client event you're going to hold in October to prep for the next tax season. But by scheduling the next task, you don't lose any of the existing clients that you have or momentum with whatever sales opportunities exist. Documented processes. If you're going to bring a salesperson in, you got to be able to describe to them what they're doing and how they do it. So again, just like everything else in the business, you want to have a properly and well-documented sales process. Your visibility is crucial and critical because it helps you understand whether or not your sales resources are delivering what they said to deliver, and that you can service the stuff that comes through the pipeline if it comes through as expected. You need to have a proper niche. We talked about this, which has the right message, which then has your website's reflective of that. You need to track everything. Again, sales is all about tracking, visibility, and relentlessness to minimize the lead times going through. And so you need to properly track these things, which again, I'll go to technologies here in a second. And technologies are going to help eliminate that friction with the client. E-signature is a good example about how to make it really easy for them to be able to take that next step to go into doing work with you. So the system side of the equation overall. A lot of people say, well, I need a CRM solution, which stands for Customer Relationship Management. I'm here to tell you you don't. If you are a tech company that's trying to drive, a billion-dollar business, yeah, go get Salesforce. But CRM solutions are expensive, they're cumbersome, and frankly, they're only as good as the sales tools that are propped on top of it. And unfortunately, you just don't have the resources for it, both to prop them up, to maintain them, and the money it's going to cost in order to have them in place. But what you really need is a contact management system, because you need to understand, which of, on your contacts, which ones are prospects, which ones are clients, and you need to be able to track the notes and the details about who they are. And that really is facilitated by a contact management system. And the systems are only as good as the information you put in them. So again, if you're going to be tasking your sales folks to track everything, you need to be able to track what's happened after a client meeting, a phone call, an email. Again, you want to be able to have it such that when a phone call is made, either inbound or outbound, that you know exactly where the prospect or the client was left at and how to continue the conversation where it left off. Nothing is more off-putting than having another conversation with someone in sales and them not remembering where we had left the last conversation. Track as you go. Again, you've got to be diligent across everything, and salespeople especially have to be diligent. Every activity, call, meeting needs to be tracked, and you need to be monitoring the progress of those opportunities and continually making sure those opportunities are being addressed and being touched. Don't worry about the concept of leads and opportunities. Again, just really care about those customers, those contacts, and the notes as applied to contact management. It's real simple. If it's someone you're trying to pursue, it's really a lead or an opportunity. It just depends on whether or not it's been qualified or not. But don't worry about getting systems that are able to track them independently. For all intents and purposes, if there's someone of interest, it's an opportunity. It's just a matter of whether or not you should be focusing your time on it. You want to capture the details of people so you can proactively reach out. You want to be able to, if you've been able to capture a bunch of contact information, you're at a networking event or whatnot, you want to be able to know things about them in terms of the relationship. You want to be able to send them a thank you card, a birthday note. You may know something about their business. So maybe when something else comes up, you can give them some advice, because that's going to lead them from a marketing funnel into a sales funnel, and you can nurture them over time. A lot of situations and a lot of contact and CRM products out there can't handle the accounting industry. Again, you may have a client or a contact that might be a tax client, they might be a small business owner, they might be part of a nonprofit. They might have 17 entities underneath them. And again, most systems fail on that because the one email address is related to one project or one client. So make sure that when you're looking at products or technologies, they can support that. There's a bunch of different sales products out there. I've listed out what I call horizontal ones. These ones work for any industry, whether or not you're in the accounting industry or other ones out there. But HubSpot and Sitely, Pipedrive, again, there's a whole host of them out there that people use for sales. Other ones out there, again, that people use in terms of helping nurture through the pipeline are Calendly, so you can move someone from an email to an actual appointment, Zoom to do teleconferencing, and Gorgias is just an example of how to do tasks and ultimately some lighter weight sales sort of follow up from doing email campaigns and so forth through Chrome and Gmail. If you want something that's more industry specific, you can check out Carbon. We do bits of it as well and help bring that together if you're interested in something that's more focused on the accounting industry. So now we talked about ultimately the technology, ultimately the process overall. Let's just go down into the marketing funnel that's actually going to lead to your sales funnel overall. So the first one, again, is just really around inbound. And inbound and outbound, they're like a seesaw. When you first start out, you're going to be focusing your efforts on inbound because you need to be able to prop up your website. You need to be able to sell the story. And then as you remove focus from that, you then want to tee up your outbound. So you're going out and finding people, because it's not always, you're not always to have people find you at the rate that you want. And you have all the slides and everything provided to you. And again, I've given a marketing 101 discussion that's also on firmofthefuture.com. But these are all the different things you can look at that's in the marketing mix. There's a lot to it. And so I'm just going to focus on the main things for inbound overall for you to really know. But that's a collective set right there. One is your message. If you want to be able to attract people and close deals, you got to be able to speak with a message that's going to resonate with your audience. And that's why a target audience, that niche market focus, is really important, because when the words that you choose, the slogans that you use, the arguments that you're going to put forward, they've got to resonate. And again, narrowing it down is going to be really helpful. Second one is, once you understand that message, you're going to retweak your website. You need to make sure that the incoming people know what you do, how you do it, learn about you, and they're validated so they can pick up the phone and reach out to you to learn more. Your referral marketing is your number one place to go. And so again, with the prior two pieces, then you can go and do a real push on the referral side. And referrals also might lead to ratings and reviews, which provide you social validation online for, again, people to take the next step forward. And so you want to maximize the benefits you have in your existing customer because, again, it is a referral-based business. And then again, if you want to take the inbound to the next level from that, then we're really talking about content marketing. And this is where you need to tune your website to be search engine optimized and possibly doing some social activities and the like. So this is the collective set of things to do on an inbound marketing side. Again, it's all about being relevant. It's about having fresh content, and that's all super targeted. The reason why it's the first place to focus is it's super, super inexpensive as compared to outbound. Typically, most firms underinvest in it, and the examples of things that people would do is on the right there. Again, website SEO, social proof with Google My Business, or find a pro advisor directory. And again, there's other things down there around the content side. Now, step 6 is, as you've done the inbound bits, you then want to move more towards the outbound. You need to be super smart about how you do your outbound activities. Because if you're not, it's essentially akin to doing this. Taking money, lighting it on fire, and throwing it out the window. Because advertising can be really expensive. And again, it's not necessarily the right thing to be doing. And if it's untargeted, unfocused, you are going to get a super poor ROI, And again, it is literally like throwing money out of a bucket out the window. And so the things you need to consider with outbound is it's the highest cost vehicle. It really has a low probability for success. And again, this is where your talent on sales and marketing gets you a step forward, but also how narrowly you focus is important to improve that probability. And how do you get there? Well, you need to talk to your existing clients, find out what they do, how they do it. What is their journey? Where do they consider services like what you offer? Where do they shop? What do they buy? Again, get into the head of your particular target audience and figure out where you're able to intercept them in key moments of their journey. You got to speak their language. And then you got to figure out how to pique their interest and give them one call to action. So every email should have one button. Every conversation should have one hook. What is the thing that you want them to do next? And then drive them to that. Examples of outbound: e-newsletters, email marketing. Some of you might be direct mail. Again, it doesn't have to be to pure prospects. These might be even to existing clients that you're trying to nurture into becoming monthly subscription clients versus once-a-year clients. Local events. We had people, partner with folks in an Apple store to do training on small business. And then you start to get some more of the expensive stuff like ads and trade shows, cold calling, and telemarketing. So again, the things at the top there are relatively easier. Things at the bottom become much more complicated, time-consuming, and expensive. And so again, you got to figure out what's right for you, what's right for your audience that you're trying to attract. And then the last step of this all comes down to scale. Now you want to scale up on your sales function as it becomes accretive. And what I mean by that is, my definition of that is when the revenue is going to equal the cost plus the margin that you want to assume. And so if you have good visibility across your sales pipeline, you understand how it is, how what your ability to close and what time frames, you can start to see where the amount of opportunities that sit in the pipeline are passing the capabilities of the salesperson, and that you're losing on opportunities because you're not able to address it with enough resources to close them in the proper time. Now, some people decide to wait until when the person comes on, there's enough in the pipeline for them to be able to instantly be able to substantiate the cost of that additional resource being added. Others will do a 3 to 6 month sort of, doing it 3 months beforehand, because they know that there's training involved and they want to time the point where the person is going to be the highest level of productivity to the moment where the sales pipeline is rich enough to substantiate that extra body. So there's no, so again, you have a full queue to work with. And so that's essentially how you're going to scale. And that's how you scale from having one person to 2 people up to maybe like that one firm I mentioned that had 16 people overall. So I know there's a lot of content today. The point was to give you a full holistic view of how sales should function in an accounting firm and what the best of the best are doing out there overall. So I just want to do a quick recap. Again, we're going to get to that polling question here in a second. So the one is really, again, how to have that simple, effective sales process. It first comes down to your target market. Be as narrow and as focused as you can. Number 2, you got to be able to measure this. And I gave you some high-level ones that you already know, but then what I call accounting as a service metrics and those particular sales measures that you want to look at, which is from ops to close, the cycle time, and the quality metrics and things of that nature. Next comes down to structure. Think of your business like a small business. It is. Again, you need to have the proper functions to support marketing and sales. It's not just a side job for somebody else. If you really want to do this, you need to have the right people doing the right jobs. And then you got to have that infrastructure in place. You have to have the right people with the right incentives, ultimately being able to leverage the right processes and the right tools to be as effective and efficient as possible. And then you're going to focus on working on your marketing funnel to lead you to the best amount of leads into your sales funnels. And you can start with the inbound side of the equation, then you're going to work to outbound, and it's going to seesaw your efforts over time as you're able to tweak each one of those in and out. And then you're going to scale it up further as it becomes accretive overall. And so, again, if you want to have more education, tips, and tricks, I referenced a lot of things in terms of target market, in terms of marketing 101, organizational design. They're all up there on firmofthefuture.com, so you can go ahead and check them up there. With that being said, before I go through the rest of the slides, I do want to get the polling question up there for everybody. So I'm going to go ahead and put this up. Let's launch the poll. I had given a CPE challenge question today, and your answers are robin, chickadee, woodpecker, cardinal, or quail. So for those of you, please respond with your quick answer. Give it a couple more seconds. 3, 2, 1. Get your votes in there. And I'm going to close the poll. Okay. So firmofthefuture.com, if you want a little more background in terms of what I talked about today. For those of you that want to actually do more education, do a bit broader, you can come to Firm of the Future. We talk about subjects like this. We talk about referral marketing. We talk about practice growth, practice efficiency, value pricing, all that. Go to Firm of the Future. Again, you go to firmofthefutureroadshow.com or go to QBtrainingevents.com to see what's locally in your area or online. You can also do fundamentals training for QuickBooks Online. If you want to get certified, again, that's the next step of the journey. And then lastly, advanced certified. Again, if you're interested in a lot of the content that I'm talking about and so forth, you can also go to Carbon. If you want to learn about upcoming webinars and our editions overall, you can go to carbonhq.com/editions. If you want a demo in Carbon overall, go to events.carbonhq.com. Overall, I just want to give a big thank you. If you've got any questions, comments, and so forth, feel free to email me at ian@carbonhq.com. I'm not shy. I'll answer them. Today, the webinar is brought to you by Carbon and Intuit overall. Appreciate Intuit for that overall. And again, I appreciate you spending the time and learning about how to do a simple and effective sales process.